Just a reminder that StatsCan estimates that economic growth in Canada stalled in February. And we're facing what BMO economists call a hammer blow of threatened tariffs on our auto exports to the United States. There are some alleviating factors here. Let's bring in Erik Johnson, Senior Economist and Vice President Economics at BMO Capital Markets. It's great to see you. By your calculations or StatsCan's numbers, our exports of autos and auto parts is about 2.6% of GDP.
Yeah, so just a little bit under 3% of our GDP. So when you look past oil and gas, which would be the predominant category of Canada's exports to the United States, it's, the next biggest category of exports there. So certainly a meaningful component of, what we're sending abroad here, and particularly when you zero in on that, manufacturing or non-energy portion of our production.
And it's about 2.5% of our total economic output?
So
GDP?
If we're just looking at GDP, so what you want to be careful with there is exports aren't on what's known as a value-added basis because, we import things from the United States, we import things from Mexico that then go into a final vehicle that we say, is shipped to the United States. So if you go on a GDP basis, which does sort of factor in that there's input costs embedded in those exports, it's a little bit under 1% of our GDP overall. So just around 0.7 or 0.8%, depending whether we're looking at employment overall in this country or GDP.
That's it. So it's less than 1% by that measure of our total economy. These auto tariffs threaten a hammer blow, you reckon, to the economy?
Yeah. So I think, yes, it is a smaller segment of the overall output in Canada, but you have to remember it's an industry that, one, is very concentrated in certain parts of this country. So, southwestern Ontario and places like Windsor, Woodstock, Cambridge, London, Oshawa, they're much bigger participants in this industry. And then what you want to think of as well is, there's a lot of other ancillary and linked suppliers that, are a little bit outside of maybe the direct measurement of that sector. Even a simple example would be, aluminum and steel is a really big input provider to our automotive sector, and they're also facing their own kind of additional sectoral tariffs here. And so it gives you a sense that, yes, maybe just on the small or kind of overall like zoomed out measurement, it does maybe look like a smaller fraction of the economy, but there's going to be some bigger implications of this. One way to think of it is from an employment perspective. So StatCan has an estimate where they look at the embedded jobs in our exports to the United States, and over 160,000 jobs from motor vehicle and parts are embedded in our exports to the United States. So it gives you a flavor. Not all of those exports are going to disappear with these tariffs, certainly, but it does, kind of issue some of the table stakes here of, the potential furloughs or layoffs we could be looking at if these tariffs remain in place for some time here. And
there is a little bit of a break here. Under CUSMA, vehicles that currently meet the regional value content rules, CUSMA being the current free trade agreement, the replacement to NAFTA, tariffs will only go on the non-American content of the vehicles.
Exactly. So, and I think you're getting at some of the challenge with this is there's, just a whole layer of detail and nuance that goes into, I think trying to think about the North American auto sector as three different industries when really it is one. And so, yes, I think the Prime Minister described this yesterday as, we're getting the best of an otherwise bad deal. And, our estimates are roughly that about 50% of the content of a Canadian vehicle would be based, with U.S. content. So, maybe we'd be facing something like 50% of that effective 25% tariff or 12.5%. But, just to give you another example, if anyone's at home, wants to, go out to their vehicle and open the door there, there's a little post on the driver's side door that will tell you, what the domestic content of that vehicle is according to the, the American Automobile Labeling Act. And it actually isn't going to distinguish between the Canada and the U.S. content. It'll label them as one. And so it gets to some of these challenges of trying to unravel this very integrated, supply chain relationship we have with our partners to the south here, both in Canada or both in the United States and Mexico. And so it speaks to, it's not just a simple exercise to calculate, what's going to be like to put these tariffs into place. And it's one of the reasons why I think, in the executive order itself, it's sort of delayed the idea of applying those USMCA compliant part tariffs until they figure out a process of actually how to do this.
And we actually have a slight deficit on light vehicles and auto parts with America. Or last year it was about $2 billion US.
Exactly, yeah. So if you look at the overall motor vehicle exports, we do have a little bit of a surplus to the United States. We export, a little bit over 1 million vehicles to the U.S. We import around 630,000 vehicles from the U.S. to Canada last year. But when you include parts there, immediately the U.S. goes into a trade surplus there with us. And so again, if trade surplus is here, I don't think they, speak to whether a trading relationship is, fair or not. But it does point to the idea that at least as of right now, trade in motor vehicle and parts with the United States and Canada is fairly balanced.
Not so with Mexico. The Americans had a deficit in autos and parts, light vehicles and parts of $116 billion last year.
Absolutely. So I think, if we were to think of, what country in the USMCA area has really seen production change the most, since even the signing of NAFTA, it's really that Mexico that has seen its production share step up meaningfully. Canada, if we go back to the turn of the, 21st century, we were producing as many as 3 million vehicles compared to the about 1.4 million now. And so we look very similar to the United States in that production relationship with, how much we're producing, how much we're buying domestically. And it's just that, some aspects of that production chain has shifted to Mexico where it makes sense in parts of the supply chain that are a little bit more labor intensive. But the challenge here, it's very specialized. We don't really compete with the U.S. so much as each of us kind of, narrow in on the areas that we're the best at. And by doing so, we're able to produce vehicles for consumers in North America that are higher quality and lower cost. And so that is the challenge of unwinding that. It means, we're going to be giving up some of those efficiencies and that productivity in order to, to some degree try to deliver, more domestic manufacturing of these things in the United States. But, that part remains unclear still.
It sounds like, though, our industrial policy when it comes to cars has been a failure this century. I mean, we were at 3 million vehicles in 1999. Now we're at only about 1.3 million. I know 2 plants are closed for retooling. But it sounds like our industry has just been hollowed out.
To some degree. I think we also were a little bit of a beneficiary of, or, I guess, the lack of a beneficiary, a little bit of a failure of circumstance where around the kind of last big cycle, 2008, 2009 crisis, the demand for vehicles really shifted pretty dramatically in North America. We used to have a pretty even balance between passenger cars and light trucks or SUVs. And what we've actually seen, over the last 15 years or so is that dramatically tilt in the favor of light trucks. So 75% to 80% of all vehicles we sell in North America are light trucks. And it just so happened we didn't produce as many of those, kind of 10, 15 years ago. And so that's one of the reasons why we actually have seen production, turn the other way in Canada, as well as some of these retooling efforts as, some of these automakers figure out what the next generation of auto production is going to look like.
And of course, establishing an indigenous auto industry, that's a tall order. A lot of countries have failed to maintain that.
Yeah, absolutely. I think what you want to think is because we really have one big giant auto sector in North America, to try to rescale it and resize it just to serve the domestic market is going to be a challenge. Now, listen, Canadians are a very big customer of even U.S.-made vehicles. We're, their number one customer of U.S.-made vehicles. So, there's still going to be kind of an indigenous demand for vehicles here. And, in the interim with these tariffs, we might see that shift to a little bit of some of those Canadian-made vehicles specifically. But, it will be a very different industry going forward in a world where these tariffs remain in place.
Yeah. And of course, I meant indigenous in the sense of a homegrown, Canadian-owned business. Thank you very much indeed.
Yeah, my pleasure.
We got some